Everybody is looking for ways to save on taxes, but do you know the secrets the rich use? Discover the shocking tax tricks the wealthy use to keep their fortunes growing. This could change how you view money forever. Stay tuned. Please remember to like, subscribe, and comment for more Money Smart Basics videos. Stay until the end to receive a bonus tip. A Rigged Game, the Tax System and You. Written by John Oliver from HBO's Last Week Tonight with John Oliver. Let's be honest, folks. The American tax system can feel like a rigged game. You work hard, pay your taxes, and then hear about billionaires paying a lower rate than their secretaries. It's enough to make you scream into the void, or maybe just at your tax forms. But how is this even possible? Well, grab a stiff drink and buckle up because we're about to dive into the shocking truth about why the rich pay less taxes. Making money while you sleep, capital gains versus your paycheck. Have you ever wondered why it seems like some people are always working hard but never getting ahead, while others seem to effortlessly accumulate wealth? The secret often lies in the difference between earning a paycheck and generating capital gains. First, let's talk about how the wealthy actually make their money. It's not just about having a high-paying job. In fact, many wealthy individuals focus on creating multiple streams of income, particularly through investments. You clock in, work your tail off, and get taxed on that hard-earned income. This is the reality for most people. Your paycheck is subject to income tax, Social Security, and other deductions, which can take a significant chunk out of your earnings. Rich people, on the other hand, often make money differently. They understand the power of letting their money work for them. Instead of trading time for money, they invest in assets that grow in value over time. They invest in things like stocks and real estate. These investments can generate returns through appreciation, dividends, and rental income, creating a steady flow of passive income. When those investments increase in value, that's called a capital gain. Capital gains can come from selling stocks, real estate, or other assets at a higher price than what was originally paid. And guess what? Capital gains are taxed at a lower rate than your regular income. This means that the wealthy can keep more of their investment profits, further accelerating their wealth accumulation. Think of it like this. You're stuck on the tax treadmill, running in place. Every dollar you earn from your paycheck is taxed at a higher rate, making it harder to save and invest. The wealthy are lounging on a yacht, sipping cocktails, and their money is making more money while they soak up the sun. Seems fair, right? But it's not just about fairness. It's about understanding the system and making it work for you. By learning to invest wisely, you too can start generating capital gains and move closer to financial freedom. Loopholes galore. How the tax code favors the wealthy. Now let's talk about the tax code itself. It's a labyrinthine mess of rules and regulations. And guess who benefits most from its complexity? You guessed it, the rich. They can afford teams of lawyers and accountants to navigate this maze and find every possible loophole and deduction. It's like a game of hide and seek, but the wealthy get a map, a flashlight, and a head start. And they wrote the rules of the game in the first place. Write-offs and deductions, the rich get richer. It's a phrase we've all heard, but what does it really mean? How do the wealthy manage to keep more of their money while the rest of us struggle to make ends meet? Let's break down some of the specific ways the wealthy shrink their tax bills. It's not just about having more money, it's about knowing how to use the system to your advantage. Ever heard of deductions and credits? These are tools that can significantly reduce the amount of income that is subject to taxation. These are like magic spells that make taxable income disappear. Imagine having the ability to wave a wand and see your tax bill shrink. That's essentially what these deductions and credits do. For example, there are deductions for mortgage interest, charitable donations, and even the costs of running a business. These are not small amounts. They can add up to tens or even hundreds of thousands of dollars. Now, these deductions can be helpful for average folks too. A middle-class family might benefit from a mortgage interest deduction, or a small business owner might deduct the cost of their home office. But the wealthy can take advantage of them on a much larger scale. They have the resources to invest in multiple properties, make substantial charitable contributions, and run large businesses. They're more likely to own multiple homes, make significant charitable contributions, and of course, run their own businesses. Each of these activities comes with its own set of tax benefits. So, while you might be deducting a few $100 for student loan interest, which is certainly helpful, it's a drop in the bucket compared to what the wealthy can deduct. They're wiping out millions in taxable income. This isn't just about having more money, it's about having the knowledge and resources to navigate the tax code effectively, and that's how the rich get richer. Billionaires' Playbook: Tax Tricks of the Ultra-Wealthy. Ever wondered how the ultra-wealthy manage to keep their fortunes growing while seemingly paying so little in taxes? It's not just luck, it's a well-orchestrated strategy. Don't even get me started on the billionaires. These individuals have access to resources and advisors that most of us can only dream of. They employ teams of financial experts whose sole job is to find ways to minimize their tax liabilities. These folks take tax avoidance to a whole new level. It's not just about finding a few deductions here and there. It's about creating an entire financial ecosystem designed to protect their wealth. They use complex strategies like offshore accounts, trusts, and charitable foundations to shield their wealth from the taxman. Offshore accounts allow them to store money in countries with favorable tax laws, while trusts can help them pass on wealth to future generations without incurring hefty taxes. Take Amazon founder Jeff Bezos, for example. His wealth is astronomical, yet his tax payments are shockingly low. He's one of the richest people on the planet, yet ProPublica revealed that he paid zero in federal income taxes in some years. How? By leveraging the tax code to his advantage, by using legal loopholes and deductions, of course, and he's not alone. Many other billionaires have managed to minimize their tax bills through similar means. Leaving the rest of us to foot the bill for essential services like education and infrastructure. This disparity raises questions about the fairness of our tax system and whether it truly serves the public good. The debate over tax fairness is not new, but it has gained renewed urgency in recent years. As the gap between the ultra-wealthy and the rest of society continues to widen, more people are calling for reforms to ensure that everyone pays their fair share. Some propose closing loopholes and increasing transparency to make it harder for the wealthy to hide their money. Others suggest more radical changes like a wealth tax to redistribute resources more equitably. Whatever the solution, it's clear that something needs to change. Our communities depend on the revenue generated from taxes to provide essential services and maintain infrastructure. When the wealthiest among us don't contribute their fair share, everyone else suffers. It's time for a serious conversation about tax fairness and the role of the ultra-wealthy in our society. The morality of minimizing taxes, right or wrong. Now, some argue that it's perfectly legal for the wealthy to minimize their taxes. They say it's their right to take advantage of the system. But is it morally right? Is it fair that those who benefit the most from our society contribute the least? Think about it. The wealthy rely on public infrastructure like roads and airports for their businesses. They benefit from an educated workforce, and they enjoy the safety and security provided by our police and military. Yet they often shirk their responsibility to contribute their fair share towards these common goods. Leveling the playing field. A call for tax fairness. It's time to level the playing field and create a tax system that works for everyone, not just the wealthy few. We need to close the loopholes, eliminate unfair deductions, and ensure that everyone pays their fair share. This isn't about punishing success, it's about creating a more just and equitable society. The price of inequality: societal impacts of tax avoidance. Because here's the thing, this isn't just about money. This is about fairness, opportunity, and the very fabric of our society. When the wealthy avoid paying their fair share, it undermines public trust, fuels inequality, and starves essential services of much-needed resources. Schools crumble, infrastructure decays, social programs are slashed, and the gap between the haves and the have-nots widens, threatening the very foundation of our democracy. Can we fix it? Reforming the tax system. The good news is we're not powerless in the face of this injustice. We can demand change. We can push for comprehensive tax reform that closes loopholes, raises taxes on the wealthy, and invests in our communities. This won't be easy. The wealthy and powerful have a vested interest in maintaining the status quo, but with enough public pressure, we can create a fairer and more just system for all. Your role in tax justice speaking up for change. So, what can you do? Educate yourself about the issues, contact your elected officials and demand tax fairness, support organizations fighting for economic justice, and most importantly, don't stay silent. The fight for a fairer tax system is a fight for a more just and equitable society, and it's a fight we can't afford to lose. A fairer future. Imagining a more equitable system. Imagine a world where everyone contributes their fair share, where essential services are fully funded, where everyone has the opportunity to succeed, regardless of their zip code or background. This is the world we can create if we work together to reform our broken tax system. The time for action is now. Let's build a future where prosperity is shared, not hoarded, and where everyone has a chance to thrive. Congratulations, you made it to the end of the video. With that, you are ahead of 90% of most people in America. Here is the bonus tip that we promise. None of those wealthy fat cats pay taxes. Let's bust that myth. Many believe the wealthy dodge taxes, but in reality, the top 1% pay nearly 40% of all federal taxes. Surprised? It's time to rethink those misconceptions. The information in this video is for educational and entertainment purposes only, and is not intended as financial advice. We are not financial advisors, and the content should not be construed as professional financial advice. Always seek the advice of a qualified financial advisor or other professional regarding your specific financial situation. The use of any information provided in this video is solely at your own risk. Please remember to like and subscribe for more Money Smart Basics videos.